Let me know. What is the point of paying term insurance premium for 30 years? And if your family claim is rejected because of one incorrect answer given decades ago, your spouse, children, and parents should not have to fight over an undisclosed secret or a minor medical condition or a proposal form filled by someone else. And let's be clear, no honest advisor can guarantee a 100% claim payout because claim depends on complete disclosure, an active policy, and the cause of death and the applicable terms. And however, most avoidable rejection risks can be prevented before the policy is issued. So, hi, I am Mariam, and you are watching Policy Hub. And if you are new here, then subscribe for the latest insurance updates. And in this video, we will uncover the hidden clauses and conditions in term insurance that can lead to claim rejection, including disclosure rules, policy lapses, exclusions, and how to make your policy claim ready. And let's begin with one of the most misunderstood provision in term insurance, which is the 3-year incontestability rule under Section 45 of the Insurance Act 1938. Many people believe that once a policy completes 3 years, the insurer must pay every claim without question. And that is not entirely true because lapsed policy and contractual exclusions or the use of fabricated documents can still affect the claim even after 3 years. But Section 45 is only one part of the claim process. The accuracy of the information you provide while purchasing the policy is equally important. Even a small or casual lifestyle habit can become a major issue if they are not disclosed correctly. And let us discuss a question people often answer creatively. So, do you smoke or consume tobacco? Some say, I only smoke at parties, I only vape, or I use chewing tobacco, not cigarettes. And then comes another common response, I drink only socially. So, insurer cannot guess what these statements mean. Wherever asked, clearly disclose the type, frequency, and the quantity your tobacco, nicotine, or alcohol consumptions. Do not play vocabulary games with a contract designed to protect your family. The same rule applies to your height and weight. Always provide your current measurements and disclose any major recent changes. Because higher premiums may feel uncomfortable today, but this put 1 crore claim can be devastating for your family later. And another is existing medical condition. So this is the next major risk is incomplete medical disclosure, where many applicants disclose only what they consider serious. High blood pressure, it is controlled. Thyroid disorder, just one tablet. Abnormal report, doctors say not to worry. But the insurer cannot access the you do not disclose. Mention every condition, medication, surgery, abnormal test, and pending investigation asked about in the proposal form. Do not decide what is relevant. Your responsibility is disclosure. So the insurer's responsibility is underwriting. Higher premium or modified terms are far better than leaving your family with a dispute claim. And the next hidden risk is family medical history. Proposal forms may ask whether your parents or siblings had cancer, diabetes, kidney disease, stroke, or heart disease, especially at an early age. So, some applicants answer no, simply because they are personally healthy. But that is not what the question asks. Family history helps the insurer access hereditary and long term risk. So, mention the condition, affected family member, and approximate age at diagnosis or death wherever requested. So, you are not being punished for your family history. Disclose it honestly. Next and very high risk is hobbies and dangerous activities. So, do you participate in racing, diving, mountaineering, skydiving, combat sports, or private aviations? Then disclose it. Hazardous activities may be treated differently under each policy benefit, and the base term cover may have limited exclusions, while accidental death or disability riders may exclude racing, dangerous sports, certain aviation activities, intoxication, or criminal acts. So, even if the base claim is payable, the rider benefit may be rejected. Never assume every benefit has the same coverage. Base cover, accidental rider, disability rider, and critical illness rider each have separate definitions and exclusions. And the most individual term policy contain a suicide exclusion for 12 months from the commencement of risk or revival. So during this period, the full death benefit is generally not payable. Instead, the nominee receives the amount specified in the policy wording, such as percentage of premiums paid or the surrender value. So notice the word revival. If the policy lapses due to unpaid premiums and is revived later, the 12-month suicide exclusion period may begin again from the revival date. This is not a minor technicality. It can completely change the amount your family receives. Next is critical illness rider exclusions. So critical illness rider pay only when the diagnosis meet the exact definition in the policy. A mild heart condition or early stage cancer may not qualify, but these riders may also include waiting periods, survival periods, and pre-existing disease restrictions. So do not focus only on the numbers of illness covered. Check the definitions, exclusions, waiting periods, and whether the payout is additional to or reduces another benefit. Never let someone else control your proposal form, because the proposal form is the foundation of your insurance contract. Fill it yourself where possible, answer every question honestly, and review all details before submission. Never sign a blank form. Share an OTP without checking or allow someone to select no everywhere for faster approval. That is reckless mis-sellings. So after issuance, preserve all policy documents and review them during the 30-day free look period. So term insurance is not automatically a scam, and every rejected claim is not always the insurer's fault. Wrongful rejections should be challenged, but many disputes begin when applicants hide smoking, ignore medical conditions, allow others to fill the form, or let the policy lapse. Your nominee cannot correct these mistakes 20 years later, so do not compare premiums alone. Review disclosures, exclusions, and policy terms carefully, because cheaper policy is worth less if the applications contain false information. Paying slightly more after complete disclosure gives your family something far more valuable, which is certainty. So, term insurance is not just a document, it is a promise your family may depend on when you are no longer there. And I hope this video clear your all doubts. And if it is, then do like it, share it, and subscribe to our channel. See you in the next video. Until then, bye.